Okay, so another question that I get pretty often is, Juan, how do we know that an interested buyer is actually qualified to buy the house? Like, what type of information would you ask for? How do we know? We don't want to waste time with people that are just curious and they like the house, but then, maybe their loan falls through. And that's a legitimate question. So if we're working with a cash buyer, so right, if we're selling your property and we have somebody who's a cash buyer, we're not just simply going to take their word for it, right? So we're nice about this conversation, right? I try to be as diplomatic as possible, but if we're working with another buyer's agent, they're going to know exactly how the process works. But basically, we're going to ask them for proof of funds. So we want to see if they're a cash buyer, we want to see a recent bank statement that says John Smith, the most recent date possible with with enough balance to cover the purchase price, right? And in US dollars. If we're working with a cash buyer, we want that to be in US dollars in a bank account in the US. Why do I say that? Well, because in Miami, we have a lot of international buyers, right? Which is great. It's wonderful. It's awesome. They keep the economy moving and it's awesome. But every now and then, there's a cash buyer who legitimately has cash, but they have the cash in a different currency. So if they have the cash in pesos in some other country and the currency exchange changes, maybe today they have, I don't know, $100,000, but tomorrow they have $85,000. And so it has happened. Fortunately, it hasn't happened to me, but it has happened where a buyer says, look, I want to buy this $400,000 property, cash offer, they give a deposit and everything looks great. And a realtor maybe didn't do their due diligence. And it turns out that the buyer did have the money, but they had it in another country in that bank account over there. And when it came time to close, they, instead of having 400,000, they had 350,000. And now they didn't have enough money to close. And now they potentially lose their deposit or they have to scramble around to try to complete the purchase price or something. So in advance of signing a contract, if we're working with a cash buyer, we would always ask for legitimate proof of funds from a US bank account. And then they would give a significant deposit that if for some reason they couldn't close on the property, they would forfeit that deposit. So that would be with a cash buyer. Now, if we're working with a finance buyer, which and it's more common, right? A buyer that has financing, whether they're financing, with 5% down payment, 10%, 20%, 50% down payment, it doesn't matter. What we would ask of that buyer is for a pre-approval letter. And depending on the type of loan and the bank that they're working with, sometimes we can get what's called a DU approval. A DU approval is what's called a desktop underwriting approval. And it's a very, kind of a lingo in lenders terms, but depending on the bank or the lender that they're working with, typically if they're working with a mortgage broker or a direct lender, they'll usually be able to provide a DU. And again, it depends on the type of buyer that we're working with, especially like first-time buyers, because typically first-time buyers are coming in with the smallest amount of down payment, and they're usually buying at the top of their affordability, compared to somebody who maybe has 20-30% down payment, who can very more comfortably, they're more financially secure. But anyway, if we're working with a buyer who needs a loan, we would ask for a pre-approval and if possible a DU approval. And then we would also always still verify with that specific lender who issued that pre-approval, and we would confirm, did you in fact already verify the buyer's tax returns, their income, their credit, their financials, their proof of their funds, right? Did you actually already see it, or did the client just tell you? In other words, did you see their last 2 years of tax returns and you verified that they earn 50, 60, 180,000, $100,000 a year? Or did they just tell you that they earn $100,000 a year? Because that's different. So anyway, we would definitely do all this due diligence in advance of signing a contract with any buyer, so that we can avoid most issues. And we've been doing this for a long time, and we always do this. And knock on wood, I would say 99% of the deals that we sign have closed. If for some reason a buyer's financing falls apart, it usually is for reasons that were outside of their control, typically, like a layoff, they lost their job, something like that. Like during COVID, for instance, during that initial moment of COVID between like April and May of 2020, that happened sometimes. Somebody had a job, they were under contract, everything was good, and then COVID hit, and now they were temporarily laid off, right? And then the banks wouldn't approve their loan. So anyway, so I hope that gives you some clarity. Of course, if you have any other questions on this topic or anything else, feel free to reach out to us. We're happy to clarify, and we'll see you in another video.